Hey, how's it going? So, just want to mention a couple of things before I get into today's video. Yeah, I'm doing my roundtables once again. If you don't know about them, go onto my page for this channel, and you'll see it right there, the roundtable. That's where I do my discussion shows. I've done a couple on Tuesday and Thursday. The one yesterday went very well, as a matter of fact. And tomorrow I have a couple of more guests. You'll find out tomorrow morning when it's all settled. And yeah, doing one on Saturday, and I'm just going to keep on going with the roundtables every Tuesday, Thursday, and Saturday. I'm also doing my Patreon roundtables on Sunday. And remember, if you're a Patreon subscriber, you can come on my regular roundtables on the public channels, and you can ask questions and make comments. And oh yeah, and I didn't cut my hair. Some people think I cut my hair. What happens is that sometimes I just tie it up in the back. It's gotten that long. So anyway, what I wanted to talk about today was capital markets, which, I don't know how many of you guys are going to be particularly interested in this topic, but it's, to me, something really fascinating because it has to do with de-dollarization. The de-dollarization of the global economy and how that's going to affect the capital markets, both in the West and in the Eurasian half of the world that is de-dollarizing by leaps and bounds. Now, let me explain. See, a lot of people, smart people, and people whom on many issues I agree with, believe that de-dollarization will never happen abruptly or quickly because of the depth of the dollar capital markets. Okay, what are the capital markets? The capital markets are where you trade different commodities, stocks, bonds. Because of global dollarization, the American capital markets are incredibly deep insofar as the ability to raise capital by way of bonds, floating new companies by way of their stocks. Okay, so there are a lot of places to invest your dollars if you are a foreigner in the American markets, the American capital markets, right? Now, I'm oversimplifying for the sake of this video, but you'll get the picture in just a second. Now, the point of de-dollarization is that other countries are trading in currencies that are unrelated to the dollar. For instance, the Indians are buying oil in rupees from the Russians. Also, the Chinese are buying oil and other commodities from the Russians in yuan. The Saudis have gone into a deal with the Chinese to sell their oil, or at least a piece of it, in yuan as well. Okay? Now, what happens when you are a commodity producer of whatever sort, and you're not the government, the country, you are an individual company or enterprise, or perhaps an individual, who has received these rupees, these yuan? What do you do with them? Well, you don't want to hold them in cash, of course. You want to invest them into something, right? And so this is something that I've been thinking. See, the dollar, the king dollar, what happens to all the other countries that are trading in dollars? Even if the trade is unrelated to the United States, they take those dollars and invest them in American capital markets. Because what else are they going to do with these dollars? They can't just have them there sitting in a bank or under the mattress, right? They have to put them somewhere. You got to make your money work for you, right? But if you are all of a sudden trading in rupees, in yuan, in rubles, you're going to invest those rupees, rubles, yuan in the capital markets of those currencies now, won't you? Of course. See, I'm an oil producer. I'm Saudi Arabia. Look at me. Don't I look like Saudi Arabia? I'm Saudi Arabia, and I sell some of my oil, most of my oil perhaps, in dollars, and I take those dollars and I put them into treasury bonds, which is the key agreement that the United States and Saudi Arabia came to in August of 1974, which created the petrodollar system, right? Now, I'm Saudi Arabia. I sell maybe the bulk of my oil at this time in dollars, and I sell them in dollars. I get these dollars. I put those dollars to work for me by buying treasury bonds, or perhaps I invest in companies whose stock is traded in dollars. Everything on the NASDAQ, the New York Stock Exchange, the commodities markets, whatever, the bond market. Okay, in dollars. But if I'm Saudi Arabia and I'm selling some of my oil in yuan, I'm going to get these yuan. Where am I going to put them? in Chinese capital markets, right? Because I can't take my yuan and go to New York and buy shares of Apple or whatever with yuan. I need dollars. And so I'm going to take my yuan, and you'd say, well, why don't you just exchange them for dollars? Why would I do that if there is a perfectly functioning capital market in China, in Shanghai, in Hong Kong? Well, it's smaller, but it doesn't matter. You see my point. Why would I take my yuan, lose a small percentage of it in the exchange, and then take those dollars and invest them in New York, especially since the United States has made it clear with what it did to Russia that the United States has no problem in confiscating my assets that are parked in the United States? Do I want to run that risk? You might say, oh, it's an inconsequential risk. Yeah, but it's still a risk. You see? So rather than take my yuan, lose a percentage in the exchange rate, and perhaps run the risk of having my dollar assets be confiscated by the American government, I'll take my yuan and I'll invest them in Shanghai. Think if a lot of people start doing this, what's going to happen to the capital markets in Shanghai? Or for Moscow, if I have rubles, or in India, if I have rupees. Those capital markets are going to start to go gangbusters because people are receiving these currencies and investing them in the capital markets of those currencies. Those capital markets are going to do better than the American capital markets. And so what are people going to start to do as they see these capital markets grow because of the amount of money pouring in, the demand rising, and so the prices of those assets that you are buying in yuan, rupees, rubles rising because of the greater demand, because there's a greater supply of these foreign currencies. If I'm Saudi Arabia and I see over there in the United States that there's a risk that my investments in the US and the US capital markets might be confiscated, which, by the way, for Saudi Arabia is a real fear at this point, because the United States is extremely upset that Saudi Arabia made nice with Iran. The CIA director went on a secret visit. There are always secret visits that everybody finds out about. Anyway, he went on a secret visit to Riyadh, and he read them the Riot Act, but the Saudis were like very polite and very like, oh, fuck you very much, man. We're going to keep on, continuing on this path of normalizing relations with Iran. But you see the issue. Saudi Arabia, for instance, which is the greatest recipient of dollars because of the fact that it sells so much of its oil in dollars, they're now getting on the shit list of the Americans. And so they're going to be thinking to themselves, maybe it might be smart to unwind our dollar positions, perhaps lose some money on the exchange to yuan, but take those yuan and put them in this Shanghai stock exchange, the Chinese bond markets that are going gangbusters because all of a sudden a lot of people are pouring a lot more money into them. And you see how all of a sudden this de-dollarization can accelerate because of the capital markets. Because all of a sudden these ruble, rupee, and yuan, and I'm sure there are other currencies, but I'm just going to limit them to those three, those capital markets are going to do extremely well. The assets in those markets are going to rise in price. And so because of it, there will be the incentive to pull the dollars out of American capital markets, sell those dollars, and buy yuan, rupees, rubles, or whatever. And of course, in this process of selling out assets from American capital markets, the prices of those assets are going to go down. The dollar rate is going to go down because people are going to be taking those dollars that they got from selling their American assets and buying yuan, rupees, rubles. And so it all of a sudden will become an issue of, the guy who's going to lose is going to be the guy who's the last out the door. And what is going to happen to the American capital markets and to dollar valuation? The dollar is going to go down. The American capital markets are going to go down. You see the mechanics of it? Look, what I'm giving you is an extreme macro overview of this. It's much more complicated and sophisticated than I'm that I'm describing in of necessity, a short video just to give you a sense of what I'm talking about. But you see what'll happen. And you got to understand, see, the Russians, who are, of course, the number one global commodity exporter, I mean, across everything, energy resources, natural gas and oil, and of course, minerals, all kinds of precious metals, essential minerals for different industrial outputs, right? And of course, agro. See, since they've been cut from SWIFT, they can't accept dollars. And they're happy to accept yuan or rupees, but they can't accept dollars because of the American sanctions. See? And so the Russians who who have all these commodities that they want to sell, they can't accept dollars because since they're not on SWIFT anymore because of the sanctions, and they can't have dollar bank accounts in the West, well, then the Russians are not buying Western products because they don't have the cash on hand to be able to do it because they've been cut from the system. So they have to sell their commodities in other currencies. And so their buyers will use these other currencies. So this is baked in the cake. It's not something that I'm telling you that might happen or maybe or this or that. No, it's happening now, okay? And we're going to see how the Chinese, the Indian, and the Russian capital markets start to just go explosive. I mean, parabolic. And on the flip side, of course, the American capital markets, the bond markets, the stock markets, they're going to start to go down. And the valuation of the dollar internationally is going to start to go down. And as it starts to lose value, every other dollar holder will try to get rid of their dollars. Essentially, it's going to be a run on the American capital markets and a run on the dollar. Now, when you think of a run, like a run on a bank, for instance, you think that all of a sudden, one day, poof, everybody's at the door lining up. No. In this kind of situation, it's a much more slow-going process, a process that takes weeks, months, years. But see, if I'm the manager of a sovereign debt fund for, I don't know, Pakistan, just to give a random example, right? I have dollar assets, but I see that my dollar assets are losing value because Indians, Chinese, Russians, they are selling their assets or can no longer participate in the American capital markets. So they are selling their assets, getting their dollars, and turning them to other currencies. And me, as the Pakistani sovereign wealth manager, I'm sitting on top of a bunch of fucking dollar assets where the assets are losing value and the dollar itself is losing value. I'm getting a double whammy. So what am I going to do? I'm going to start unwinding my dollar assets and converting those dollars as quickly as possible into rupees, yuan, and rubles, and investing my sovereign wealth into those capital markets. You see the shape of what I'm discussing? It's very important that you understand it because, see, we're going to hear a lot more talk about de-dollarization, and it's about this, see? It's not so much about the buying and selling of commodities, okay? What is of real interest, what really matters, is those capital markets, the bond market, the stock market. I mean, you hear about the New York Stock Exchange every day on the nightly news or whatever, right? The NASDAQ went up or down or whatever. It's going to continue to go down, and the value of the dollar against the other currencies is going to continue to go down because of this process. And ultimately, this will lead to a point where the Federal Reserve is going to have to start printing more money for two reasons. Number one, they're going to want to prop up those asset markets as they've been doing since 2008, for crying out loud. They're going to want to prop them up, right? And at the same time, because there isn't going to be the demand for treasury bonds from the other countries that had all of these dollars for their commodities, which they would invest in treasury bonds, but now they're not because they're taking their cash and putting into the Chinese, Indian, and Russian capital markets, right? So the Federal Reserve is going to have to print more money for the US government to cover its debt. And so it can only print to both prop up the US capital markets and at the same time give the federal government the money to keep on spending as it's been spending. You see the shape of what I'm telling you. It's fairly complex. I mean, I'm giving you, like I said, a macro view. It's fairly complex, but you have to understand that everything is connected. Everything, the whole machinery of macroeconomics, it's like an enormous clockwork. And you start fiddling with one gear or another, and all kinds of havoc starts happening. And that's what's happening with the United States, because the United States, since 1974, has had this very, very stable system that worked like a charm for the Americans. Because of this demand for dollars in the rest of the world, that's how the United States financed itself. But because of the measures of the Biden administration against Russia, it kickstarted this de-dollarization. And what is going to be happening, and we will see this as just, carts follow horses. We're going to see as these capital markets in China, India, and Russia start to blow up. And other secondary markets will as well. But you see what's going on. Understand what's going on.